Hey, Dan Passarelli here. Well, it's been a pretty wily day in the market today. It's been a pretty interesting 6 months, though, hasn't it? Prices are up, but why are prices up? Prices are up because your unit of account is down, the dollar. That's debasement, and it sneaks into every single chart you trade. Now, you may have heard people talk about debasement recently in the media, but I think a lot of people can get a little confused by it. So exactly what is debasement? Well, back in the day, like hundreds of years ago, when there were coins minted by the emperor, whoever it was, they would try and bring in a little more money for themselves or the empire by diluting the base metal in the coins, adding in a little cheaper metal so that the same coin is actually worth less because it's debased. And they do that nowadays simply by borrowing and printing what we call fiat currency, which is your paper dollars or your electron dollars. So in debasement, it's not exactly inflation, but it breeds inflation over time. Why does it happen? Well, mainly because of issuing government debt. If you think about it, government debt it's actually a stealth tax. And it doesn't seem like it's a tax, but it really is. How is it a tax? Because when they issue more debt and therefore create more money, that's basically what it does, because the Federal Reserve then prints money. When they create more money out there, it makes the money worth less. And so therefore, because it's worth less, it's inflationary, and the value that you have is worth less. That number of dollars you have buys less. So it's kind of a sneaky little thing. Now, let's talk about what this means for the markets. Well, first of all, because stocks are assets that are not dollars, if the dollar gets cheaper, that means that stocks relative to dollars are getting more expensive. So when you see a chart like this that we have up here, yes, the stock itself did go up by that much, but it went up by that much in dollars. And so if you back inflation out of that, your wealth actually grew significantly less. Now, what does this mean for stock prices going forward? Well, a couple of things. A typical company, especially one that doesn't have a lot of locked-in debt, it's typically bad for them because their costs go up. Now, the stronger companies, especially ones that are like cyclical companies or sell things that people have to have, they can be okay because they have pricing power. They can raise their prices along with their costs. But other companies, they can run into trouble. Companies that don't have a lot of debt, that's actually bad for them. It seems kind of counterintuitive, right? But think about like your mortgage, right? If you have a mortgage, you own this asset, and the assets relative to dollars go up in value, but the dollars you owe don't change. So debt can actually be good depending on if it's a floating interest rate or if it's a solid interest rate. Another thing that happens with debasement is you tend to see a lot of volatility. And we're seeing some of that now, especially with Jamie Dimon's cockroach comment the other day, which is just pointing out to the thing that happened with First Brands, where there was a lot of off balance sheet financing. That combined with the fact that a lot of the auto loans, the subprime auto loans, have been being defaulted on, there could be a lot of problems out there just hiding. And in a time of debasing currency on top of that, that can cause some volatility. This also, by the way, is the reason why both stocks and gold have both been going up. That seems counterintuitive. You would think that gold would go up when things are a little bit shakier. which in a sense they are. And that's why we've seen gold go up much more than the stock market. But they're both, I mean, you have to spend dollars to get both, to get gold or to get stocks. So that's one of the reasons why both of them are going up. So as far as what to do with options, covered calls and cash secured puts can work, but they can be a challenge directionally as well. Covered calls has been a challenge directionally. And over the last week or so, cash secured puts have been a little bit scary, but we are getting this very, very high implied volatility across the board, which makes those options actually overpriced. But we got to be careful of that negative gamma. How do we keep an eye on this debasement? Well, we look at deficits. We look at deficit spending and we look at trade deficits. The dollar being debased actually benefits the trade deficit, in theory anyway, because it's cheaper for other countries to buy our stuff because they have to buy dollars, which are cheap relative to them. Again, this is in theory, and there are other countries who are facing debasement issues as well. So that's not necessarily the case universally, but that can potentially help the trade balance, which can be offset by tariffs, but that's a different video altogether. So bottom line, debasement props up prices, not value. So we have to think about that in this market regime. Trade the regime, debasement, not the headline. Hope that helps. This is Dan Passarelli, Trade Smart.